Harmit, good to see you, and good to see you in person. I was thinking back before this interview, I have not actually met you in person. I've talked to you from my kitchen for the past 2.5 years.
You know, time flies, Brian. It's great to be here in person. And I'm coming to New York after a little over 2 years, and it's good to see things coming back to normal. You know, we did our earnings here yesterday, and today we're attending the JP Morgan conference. So great to meet you.
I imagine it's good to, it's well timed, of course. You guys had your earnings out, and one thing that stood out to me was you have raised prices, consumers haven't balked. Why do you think that's the case?
I think our brands is all about, you know, the fact that our brands are resonating. You know, there's a couple of messages in our earnings. First, we started the year with strong momentum on the back of a real good 21. But it's really driven by the fact that our brands are resonating. All our brands, we have 5 brands, all of them grew. The category is been growing. You know, our category, the denim sales in the US were up 11% relative to pre-pandemic. Our business was up 22%, and our earnings were up, you know, 35%. The good news is, despite the price increases, we are selling more units, so it's a balanced growth. So that's fact number one. The fact number two is the areas that we're focusing on strategically, whether it's growing digital, whether it's growing our brands, whether it's growing both men's and women's, are all resonating. And our brands, despite the pricing, still offer tremendous value.
On pricing, how much have you had to take up prices because of inflation? I think so many people would agree they've never seen inflation like we're seeing now.
Yeah, no, it's really unfortunate. And we, you know, when we take pricing decisions, we do it thoughtfully. It's not that we pass every dollar of inflation on to the consumer. We actually look at, you know, what can we absorb internally. Then we price for innovation. You know, so, you know, we're innovating at breakneck speed, new products, new styles. And after that, we price, you know, on our core products. So we've been taking pricing a year ago. We knew this was coming. And, you know, because we offered great value, we've been using both art and science. A lot of data science goes into this. So our pricing, our AURs,
average unit retail?
Average unit retail is up 10% year over year, and 70% of that is primarily pricing. The other 3% or 30% is driven by mix changes. And it is sticking because, you know, it's being resonated, it's been driven by the fact that our consumer demand is also up, given that our units are growing. And so as we think forward, we'll probably take a little bit more pricing, but do it thoughtfully and ensure that the consumer continues to get tremendous value.
Where have you seen the most inflation?
Largely in commodities and in freight. So cotton is, you know, if you look back the last decade, cotton is at a high. And so we're pricing for that after ensuring we're able to absorb what we can. And then in freight, you know, we're also bringing, because of supply chain related issues, we're also air freighting a lot of stuff, so that does cost money. So things like that. We're also seeing some inflation in wages. Where we're trying to offset is because we've been building a lot of stores even during the pandemic. We've been negotiating hard with our landlords, and we're getting rent, you know, reductions, which kind of offset some of the inflation. And we're looking at what we can do, driven by volume and scale, to leverage our scale and ensure that we can drive prices down. You've
seen a lot of cycles in your time doing the CFO thing. The CFO of Hyatt at one time, CFO of Pizza Hut US, now the CFO of Levi's for some time. Is there anything you see in the data that would concern you about the state of the consumer? There's a lot of recession talk right now, but anything that you see that says we need to be more mindful of what's going on out there?
Yeah, no, we're mining data on a daily basis. We're talking to economists on a regular basis. The state of the consumer in the US is really strong. You know, balance sheets are strong. Unemployment is an all-time low. Wage growths are happening. But we're mindful of the lower end consumer. And so when we look at the data, we look at, you know, are people, you know, what are the saving rates? Are people dipping into the saving rates? We look at credit card data on a weekly basis. And so far, you know, the signs are all good. But, you know, this is something that, you know, we are not taking lightly, especially as we price and ensure we still offer value. I'd say, you know, gasoline prices are high. but people are driving less. So I think, just because people tend to work like you and I, we tend to work from home, a couple of times a week, etc. But we are mindful of what's happening out there. The other thing we look at is demand signal from our, wholesale retailers. Is future demand and future order books slowing down, or are the cancellations? And so far, we're not seeing it.
No cancellations for orders.
Yeah, I mean, so far, we're not seeing it here. We're not seeing it in Europe. And so, that gives us confidence. And that's where we reaffirmed guidance, for the year, where we said we'll grow 11 to 13% for the year and deliver an EPS of $1.50 to $1.56.
Levi's was early in closing its stores in Russia. When did these stores open again?
We're looking at the situation on a daily basis. As you know, rules and regulations are evolving, and we want to make sure we do right by our employees in Russia, and we also do right with the rules and regulations, stay compliant. So we're looking at it daily. Our hearts and minds go out to the people impacted by the unfortunate war in Ukraine. We have stores in Ukraine. We have employees in Ukraine. And obviously, a business, a small piece of a business is in Eastern Europe, but still, what really is very thoughtful is that our employees in Europe have really, stood out, and they're opening the doors, they're opening their wallets. We, as a company, are opening our wallets to ensure that we can do our best, for the people whose lives have been impacted by the unfortunate war.
Hey, do you see yourself doing business again there at some point?
We've got a few doors open, franchise doors open, but we're going to follow this, and we're going to do what's right, and largely been driven by our values as a company. We're very strong in our values. So I don't know is the honest answer. It's a discussion we're going to be having with our board in a couple of weeks, and we'll see how this goes. The brand has been very strong in Russia and is very strong in Europe, as you know.
China, is that back to growth?
China this quarter was down. China is a small piece of a business. They were unfortunately impacted by the COVID resurgence. Just before the latest round of COVID resurgences, China was actually headed to growth and actually delivering growth. But the good news for this quarter, even though China was down, it was profitable. And China hasn't been profitable for us for a while. So I think as we think about the business in China, long term, we still believe it is a business that we can grow and grow big time. In the short term, I think we're working with our employee base there, ensuring that they're healthy and safe, both the consumers and our employees.
Two more for you, because it's rare that we're getting you in person here. It's been some time. Let's talk about styles and trends. You're always an on-trend guy. I'm very jealous of your entire look while I'm stuck in this boring suit. But I went on the Levi site, and I see people wearing mom shorts. Is that some new form of style that I just don't know about?
No, I mean, so the good news is we do continue to innovate, and
you didn't expect that, right?
But I'm sure there'll be a day when you'll be dressing a lot more casual.
I'm not wearing mom shorts though.
Even on national TV. Shorts are doing really well, and the looser fit and the baggier fit is here to stay, I think, because we were the first to actually drive that trend. But all our new styles are working well.
A lot of vintage.
Yeah, a lot of vintage. This is one product or one brand that people actually pass from generation to generation. So we do actually buy back stuff that people have kept and collected over the years and actually resell it. So I think it's that's the wonderful thing about the Levi's brand.
Lastly, I mentioned you've been CFO many prominent places, led a lot of companies through the IPO process. How has the CFO role changed compared to, let's compare from today to 10 years ago?
Yeah, no, a couple of things. First, when I first started the CFO role, it was all about shareholder value. Today is about stakeholder value. So it's important to drive value across our stakeholders. The second, the role was a lot about control. Today it's about influence, and not only influence as a leadership style, but influence in areas outside finance, whether it's technology, whether it's ESG. I'm a big proponent of doing right for the planet, and I co-chair the U.S. chapter of accounting for sustainability, and doing the right thing and doing it the right way, which Levi's does, I think is very important. So thinking about ESG, thinking about how that actually grows in stakeholder value, I think is critical. And I think those are the broad areas. Technology is very big. I look after technology for the company, but ensuring that we're able to digitize our processes and ensuring we're able to digitize how we communicate with our stakeholders, including our consumers, is important. And that's why we are a big believer that e-commerce, which is today only about 9% of our total business. We look at all the digital ecosystem, is about a fourth of our business. That can be much bigger going forward.
Well, I'll leave it there, but I will say that it's good to know that you exist above the waist, and same goes for me. Harmit Singh, enjoy your time in New York. We'll talk to you soon.
And Brian, thanks for having me.
Appreciate it.
Great to see you in person.